Hello, everybody. This is Nataraj, and you're listening to the Startup Project. In this episode, I talked to Pranay, who's the co-founder of 91Springboard, a co-working space company in India. I talked to him about his journey of starting a company like 91Springboard, of various investments he made along the way, and his next venturing into angel investing. I had a blast talking to him and hope you will too. Hey Pranay, welcome to the show and thanks for being here.
Hi Nataraj, it's a pleasure. Thank you.
So I want to start this conversation and by let's jump into how 91Springboard started.
91Springboard has been a very interesting starting experience where Varun, who's the founder of 91Springboard, he had just exited out of his previous company called My Guest House. This was acquired by Make My Trip, which is one of the biggest OTAs of India.
So what is OTA?
OTA is online travel agents. So it's like Expedia or one of the various travel booking sites. And they had acquired My Guest House. And once it got acquired, I'm talking of about 2011, 12 days when entrepreneurship and startups was still not as cool in India. So the early entrepreneurs, they started approaching Varun and saying, your company got acquired. Can you help us?
Got it.
Can you advise us? And that's what got him starting to think towards a fund and think of it as a cross between a small fund and a Y Combinator / Techstars. That was what he was trying to set up. And in parallel for me, I was running the best incubator in India at the top MBA Institute of India called IIM Ahmedabad. And Varun and I were from the same school. When I say school, I mean K to 12. So we were in the same school. He was a year senior to me. So that's where we reconnected on this idea of let's do a fund, come accelerator together. And Anand, who's the third co-founder, he ended up joining. So he was also in the same school and he was just back from US after kind of wrapping up his startup there. And he was taking a break when Varun pulled him in saying, hey, you're on a break, why don't you come and help? And that's how the three of us got together.
I also see that you have a fourth co-founder, Deepak Sharma, and he's the ex-global chairman of Citibank. How did that happen?
Oh, that's another interesting story. In fact, let me also go through the evolution of, how the business grew, and that's where Deepak fits in very well also. So Deepak he was the friends and family of Varun who, invested in the friends and family round. So he has known Varun since Varun was a kid. Our fun thing is we tell everyone how Varun used to break crockery at Deepak's home when Varun was a kid. And so Deepak gave a small check to Varun when we were starting. And I think one smart thing we did in whatever ups and downs we had throughout the early days is we kept our investors updated about what's happening. We used to send out like a religious monthly report to our investors. And as we were growing, one fine day, Deepak looked at everything and said, guys, why aren't you growing faster? And that conversation, again, he flew down to India. We sat together and he said, Pranay, not just Pranay, but all of us. So guys, I want to invest in your company. And plus I want to join as a co-founder. And that was amazing, right? So that's how Deepak came on board later in the journey.
Whenever we talk about fundraising, right, you've touched upon how Deepak invested. How did you approach fundraising at that point? So you got this idea, you wanted to create a Y Combinator / incubator project. Were you clear in your head? So what is the first step that you guys did? Like, did you went about and see different models? What was your first sort of product / service that you started?
So we went through various evolutions, right? The first part of what we were doing was literally setting up a micro fund. and the way the economics of a small fund works. So typically in a fund, like imagine a fund which is a $10 million fund, which will be investing in startups.
Yeah.
The way the fund economics works is what's called a 220 model, where the people who are managing the fund,
Yes.
they get 2% of the fund to manage their expenses.
Yeah.
And then whenever the fund returns profits to the people who've given them money,
Yeah.
that's when they get 20% of the
Carry.
share of profits, which is called carry.
Yeah. A funny story about carry is that that term carry, right? That comes from the 17th century lingo uh, when people who were doing this trips, right, expeditions in 17th
Right.
century, when they used to go out and on a treasure hunt, and they were funded by investors, and they, whenever you get anything in that expedition trip, the 80% is given to the investors, while 20% you get to keep. So that's how they funded the original, expedition trips. And we still continue to use that lingo, and that's why we call it carry, because it's carried by the ships that are coming back.
Wow, very interesting. I
But
didn't know this.
so you actually didn't start as a co-working space then. So you were initially thinking of setting up a micro fund.
Exactly.
Mm.
And to raise the micro fund in some sense for the GP, which is the general partners running the fund, the ones who would get the 2% and 20% carry, we
Yeah.
raised a small amount of money from friends and family.
Mm.
And then the first fundraising we were doing was actually not the fundraising to invest in the co-working business, but the fundraising from what's called LPs, limited partners, who
Yes.
will give us money that we can invest in startups.
Yes.
And here we went around talking to a lot of people. Interestingly, I made a trip to the Silicon Valley area, connected with a lot of people there too, and realized that we had really grossly underestimated the effort and time it takes to raise funds. In
This was which
hindsight,
year?
honestly, this was 2013 first half.
Got it.
And in hindsight, all of that sounds so stupid, but you know how all entrepreneurs are. So we were the
Yeah.
overconfident guys knocking on each door.
Mm-hmm.
And honestly, I mean, I have now a lot of respect for those investors where they were able to see and understand that we
Yeah.
weren't ready to manage a fund at that time.
Yeah.
So, the fund never happened.
Mm.
We had a couple of investors who had invested in startups supported by me or Varun before.
Mm-hmm.
So, a lot of them were really nice, really excited, but they were clear with us where they said, "We like you guys.
Mm-hmm.
We are happy to invest in startups that you bring to us,
Mm-hmm.
but we don't want to give money into a blind pool. So we don't want to give you money which you can go around investing without us having a say in it."
Got it.
uh, and that's where we came back to uh, India, and we were sitting. This is where we had taken the initial money to set up a nice space,
Mm-hmm.
and this was the space where we'll have the startups funded by us working. Our intent was to create a small, really high growth environment.
Mm.
If I may, I think at that time, plug and play was already very popular
Yeah. Yeah.
in US.
Yes. It's
So,
still one of the interesting places. And
right. So imagine it to be not very unlike that, right?
yeah.
Where the thought was that this will be big space,
Mm-hmm.
a very nice environment where our funded entrepreneurs are sitting, there are various service providers, a lot of activities are happening.
Mm-hmm.
And it just creates a culture where the startups funded by us find it easier to grow.
Hmm.
Uh,
So initially, your idea was the space is going to be accessible for only the startups that you are going to fund, or is it going to be a co-working space, and you might use that deal flow and sort of find the startups that you want to fund?
so it was in between. It will be primarily for startups we are going to fund,
Mm-hmm.
but then we'll permit some people on selective basis where we feel like they can add value to our portfolio. That was the initial thought. So we were getting very selective.
Mm-hmm.
On the other side, we were doing a lot of activities and events which were open to public.
Got it.
And
So,
that got us, these events were really getting us a lot of recognition, lot of support, and the whole ecosystem in NCR. So Delhi is where we started. NCR stands for National Capital Region.
mm-hmm.
So the whole ecosystem in Delhi really got behind us to help the startups we were working with.
I think this was very early times, even for co-working spaces as an idea, right? You might be one of the first companies doing this.
We were the very first doing it. In fact, I have a funny story for you there. Because we never thought of doing a co-working, right?
Mm-hmm.
We never Googled if things like this exist.
Interesting. Yeah.
We did read up about plug and play,
Mm-hmm.
but WeWork was already pretty big then. By now I'm talking about 2013 end.
Yeah.
But we were dumb enough where we weren't even aware of it.
Yeah.
The interesting thing is the day we decided to pivot,
Mm-hmm.
and we were thinking that, what do we call this?
Yeah.
I still remember we were sitting in this conference room, Varun, Anand, and me, where we started thinking that it's like incubation, but the incubator is too uncool a word. People just associate it with like these rundown government funded setups.
Yeah.
Then there was this hub as a term which was going around very popular at that time.
Yeah.
But
I mean,
we
we have
wanted to
T-Hub in South India.
T-Hub and Impact Hub. T-Hub came in later. Impact
yeah.
Hub had already grown.
Mm-hmm.
So, but somehow the hubs were still not as, they
The cool
weren't real
things.
indication of what we were trying to do.
Mm.
And
Yeah.
that's where we came up with the term co-working.
Mm.
And I still remember that debate where Anand said, but that's not even a dictionary word. And we
Yeah.
went around throwing more words where eventually we decided on co-working,
Uh-huh.
saying this explains it the best.
Yeah.
And immediately after that, when we were trying to set up the site and did a SEO optimization, is when we realized, hey, this exists. Globally, co-working has existed for long enough. And here are we thinking we've invented a new word.
So your initial idea for the name was coworking.com or something like that?
No, the name remained Springboard.
Okay.
So 91 Springboard. 91 stands for India's country code.
Okay. I was about to ask why 91.
Yes. So that stands for India's country code, and the Springboard to signify that we really helps the company grow and go up in life.
So by this point, your business model was clear for you guys, right? You are going to be a co-working space, and at the same time, you will invest in startups that will seem interesting to you. Is that right?
Yes, you're right. Just that co-working at this time also, we thought of it more as a survival.
Mm-hmm. But
Our
your
goal
main
was, yes. So our thought was we'll still do a fund and that will be the core thing.
Mm-hmm.
But we were looking at our bank accounts and we were realizing that we have survival money for only one more month.
Mm-hmm.
And that's where we said that we have about, I think at that time we had say about 60 odd seats lying empty in our space.
Mm-hmm.
And there were companies lining up wanting to be there.
Got it.
Because they were really finding value. The companies in our spaces were really finding value, but we were getting over selective about who we want to allow in.
Mm.
So that's where we discussed and we said, hey, if we can fill 100 seats.
Yeah.
And at that time, we were selling them for about 5,000 rupees. So roughly about, let me say about $70 odd dollars.
Mm.
So that's where we said, if we can fill this up, we can have sufficient revenue to pay for our expenses, and it will give us a lifeline.
Yeah, I mean, it's funny. Sort of all successful startups or most of the successful startups, we end up listening some sort of a pivot story, right? You are now a full-blown co-working company, but the way you approached it or sort of ended up doing it is completely different, right? Your motivations were entirely different, and you ended up becoming a co-working space. So when you realized that you've become a co-working space company. From then on, how did you sort of scale or looked at your company versus when you looked at or approached it as a fund?
Sure. So I'll also explain how we realized that, right? So initially, the first space we had set up, the co-working aspect was purely to help us pay for expenses while the fund happens.
Mm-hmm.
Then we had a second space in Delhi again,
Mm-hmm.
where a landlord approached us. It was a pre-fitted space, and we did a revenue share,
Mm-hmm.
very asset light starting for us.
Mm-hmm.
And literally, like Anand and me started operating out of that space.
Mm-hmm.
When the first member came, we used that money to hire a employee for that space.
Mm-hmm.
So we bootstrapped our way into these two spaces.
Mm-hmm.
We, after that, got offered a space in Hyderabad. And
Mm-hmm.
this is a city about 2.5 hour flights from our flight from Delhi,
Yeah.
where there was a pre-fitted space in a building of a company which Varun sat on the board of. And they said, here is a space. If you guys want to use it, use it.
Mm-hmm.
That's when we did a conversation and we realized that let's do this experiment.
Mm-hmm.
And if we can pull it off remotely, right?
Mm-hmm.
Because it's very hard for one of us to shift completely to a new city for a small space.
Mm-hmm.
But if we can run it with a remote team and we can set up the systems to run it, then that means there's no holding after that.
Yeah. So, I mean,
And
running a co-working space is a very operationally intensive business, right? I mean, you have to take care of a lot of logistics involved in setting up a co-working space. And Springboard has grown into what, around 25 to 30 locations, right? Pre-pandemic.
right.
And how did you guys sort of scale from your, let's say, third or fourth location?
So, Nataraj, basically, once we were at 3 spaces and we proved Hyderabad as a model plus profitability to ourselves, is when we said, let's scale it up. And that's when we started thinking of all systems and processes that we need to have to be able to scale. So, of course, part of it was fundraising. This is when Deepak joined us. He invested. He brought in a couple of friends to invest. And then the other part of it was imagine the equivalent of creating playbooks. Right. So, how to set up a space, what is the kind of design we need, how do the layouts work for us, to how do we reach out to members. We started setting up our central sales team. So till now, a lot of sales were happening. Like if you imagine, like till Hyderabad, basically it was us selling centrally.
Yeah, yeah.
So that's when we started thinking through what will be happening at the hub, what will be happening centrally. And a lot of those, I mean, I can go into details, but these are really gory process creation details, right?
Yeah. So, I mean, are there any learnings that you guys would do differently? I mean, in terms of scaling, or whether some things that didn't work?
Lots of them. Honestly, we weren't from the industry. None of us had real estate background. So we did a lot of mistakes, and thankfully we learned enough to be able to survive and grow. I think a few of them, if I may, is one, we were Hawkeye, we were looking at our cash flows, but we didn't have an appropriate MIS initially to give us a good view into business.
What do you mean by MIS?
See, so basically, MIS is it stands for Management and Information Systems, but basically think of it as a document that you're seeing at end of month that gives you a good sense of the key numbers that you want to track.
Got it.
Information you want to track. So a lot of times when entrepreneurs start, they're just looking at cash flow, what's come into bank account and what the bank accounts are at. And especially in business like ours, where you're doing a lot of capex, cash flows sometimes throw you off. So in our case, for example, what we thought of our profitability from a hub and how we were taking decisions, because we were only looking at cash flows, it was sometimes things would be harder. So once we started, sorry.
So why was it harder? I mean, why did the cash flow didn't give you the full picture?
Again, so let me give you an example, and it will, again, at risk of sounding like the stupidest entrepreneurs.
That's okay. That's okay. I mean, one of the things I'm trying to do with the podcast is for whoever entrepreneur listens, I mean, the things like you're talking about cash flow or MIS, these are the stuff people actually need. And I think that will help fill the gap for up and coming entrepreneurs, right? People who want to become entrepreneurs. So yeah, it would be a good, I mean, no answer is a dumb answer, right?
Yes. So I'll give you an example of a cash flow versus profitability thing. When we started in Delhi, it was winters, and we were working out of our first hub was out of a basement in Delhi. So we realized it's cold. In fact, it's very cold, and we don't need air conditioning. So we didn't install ACs. By March, we started realizing that it's getting hot and it's getting uncomfortable.
Yeah.
And but ACs were costing enough. So in our just to survive and try to optimize what we are spending, we brought in air coolers. These are called desert coolers in India. I don't know if
I've seen
global
them.
audience has seen them.
Yeah.
But basically they use water and kind of spray of water to cool the air and throw that in.
Yep.
So we brought in that. But the issue was when monsoons, the rains started approaching, or they were, say, about 20 days away, it started getting really humid. But now we were already too invested into all of this. And we said, it's a matter of another 20 days. Once it starts raining, the humidity will go. So let's just figure out how to get humidity away. And we got in a lot of charcoal, etc., to absorb the humidity. It was a very uncomfortable environment in the space. There were a couple of members literally coming with a towel around their neck, wiping their faces while they were working. And then one fine day, as it had to be, a big team of about 10 people decided to leave us. And this is a team which really, like, we had helped a lot. And the founder, I remember that conversation, he said, I'm so sorry, but what can I do? My team isn't willing to work in this environment. I will come back, but for now I have to go. And that's when we looked at the figures and we realized that the revenue we lose on a monthly basis because of this is higher than installment cost of putting up ACs, even if we swipe our credit cards.
Got it. I mean, it's like the effect of losing a certain percentage of your customers, often referred to as churn, right? If you have the churn is more costly than the investment that you thought you were saving by avoiding installing air conditioning.
And now explaining cash flow versus P&L, because we kept thinking of air conditioning as a capital expense, right? Say if we were thinking it will take about $10,000 to install ACs, we kept thinking of that as a massive figure.
Yeah.
But the moment we thought of it as an installment on credit card, we were able to realize this is what we are paying monthly. And if it will add so much revenues to the business, it will still help us save a few in the end.
Yeah. It's also investment for the future versus just thinking about the short term, right? Because it will continue to help for, whatever time and air conditioning works, while it also improves the condition in your space.
You're right. So there's a part of branding wit and others, but I mean, what I mean is, like, we knew that, right? We were never confused on the AC is not required.
Yeah.
But just on looking at numbers, we couldn't see it so clearly that it's a how do I say, a dumb-proof decision to just take this. Right?
Yeah.
Versus evaluating it so much. So I think that's where looking at a MIS and right formats helps versus we were just looking at the bank balance. Right?
I mean, that's a great lesson of what you face in practice versus what you theorize, what a company goes through, right? So talking about just the co-working space, I first encountered your company when I was doing a different podcast and I was talking about WeWork. And the way always I looked at WeWork or any co-working space is, if you remember, the workspace itself was transformed by a couple of companies, right? For example, Google was famously known for having this lavish offices. And
Right.
once Google did that, Facebook has to do, because their offices are in the same city, right? There's a competition for employees. And then once Facebook did it, Microsoft has to do it. Once Microsoft does it,
Right.
Amazon has to do it, right? So that
Right.
kind of triggered what sort of Google started the lavishness in the workplace, and then it over time like became a necessity because employers will not be there at your company. So I always thought WeWork as like Google Office as a service. So I mean, when you realized like co-working space is all about designing and optimizing space, and at the same time providing all the benefits that a company like Google or Microsoft provides, how did you think about the space design, and did you get additional help from architects or people who are professional at doing this sort of a thing?
Definitely. So the also the way the maths in the business works, space design in this case, in our case, is one of the most important thing.
Mm-hmm.
How do you structure the space so that you can fit in the right amount of people,
Mm-hmm.
yet at the same time do it in a manner where it ensures it's not tight for them. There are all these interactive areas.
Mm-hmm.
This also becomes very important because for us as in DNA, a large part of our focus was in how can we build community, how can we get people to help each other,
Mm-hmm.
and how does that flow into architectural design is something which was always very critical for us.
Yeah, how
So
does
we
the
got in the right
space how
teams.
does the space itself like enable collaboration, right? Because that is one of the things you were trying to do from day one.
Precisely.
So you started as a co-working space, and one advantage when you have co-working spaces, and especially if you have a lot of companies using your co-working space, then you kind of also become sort of a distribution channel for a lot of other services. And right now, like if I look at your website, you have partnerships with AWS, Sodexo, Razorpay, and Pixie, right? These are all the tools and services that you guys went ahead and made deals for the consumers of your product, that is your co-working space, right? So what was the strategy behind that, and was it just an additional revenue source for you, or were you looking at it as sort of a customer acquisition cost, or both?
So it started, and for a long time, it remained a customer retention cost,
Mm-hmm.
where it wasn't a revenue source, but our thought was that how can we ensure
Mm-hmm.
that the customers is deriving more and more value by being at 91 Springboard. So a lot of these tie-ups we did were really a win-win-win tie-up,
Mm-hmm.
where the organizations were anyway looking to add new customers to their service, and they were willing to give a freebie out to, in some sense, lead to a customer trial.
Mm-hmm.
All of these were curated supports. So we
Mm-hmm.
knew that the startups, which was our primary market when we started, needed something like this, and these were the best products available. Uh, and finally, for us, we were just connecting, we were enabling, and at the end of the day, we could go to customer and say, "Hey, see, by just being at 91 Springboard, you're able to save so much value for yourself on the other things too."
Mm-hmm. So it creates a nice flywheel effect, both in terms of acquisition and also retention, right?
Right.
And does Springboard get revenue source from these partnerships, or is it just a pure partnership relation with these companies?
So we started monetizing it much later down the line.
Mm.
Now there's some amount of revenue that we have from that, but I must confess it's a much smaller figure compared to our overall
Compared to your
revenue.
core business, which is
Yes.
co-working, right? So, I mean, you guys have started originally with the idea of to invest in the startups, right? And it co-working space is sort of like a breeding ground of next successful startup. Every startup, before pandemic, started in some sort of a co-working space, be it in US or in Bangalore. So how did the investment side of the thing progress as you were, developing your co-working business?
So it was very interesting. So one, we kept our acceleration investment bits alive.
Mm-hmm.
We didn't have funds to invest, but a interesting evolution that it took was where a lot of the investors we had talked to earlier,
Mm-hmm.
they had been in touch and they told us that whenever you find a good startup, let us know.
Mm-hmm.
And on the other side, primarily because of our backgrounds too, Varun, I, Anand, however busy the co-working would keep us, we would keep meeting new entrepreneurs. We would keep helping them in some way or the other.
Mm-hmm.
And all of these will pull into a advisory sort of a role. And I had a small team which was helping out this, manage the advisories to the startup and help syndicate rounds around them.
Mm-hmm.
So we built a portfolio of about 20 companies where we had helped syndicate around, and we had some advisory equities in them. But on the other side, it's very interesting where whenever we would talk to a investor, and especially a VC,
Mm-hmm.
they would initially look at us and say, hey, all of this is interesting. The space thing that you're doing is interesting. But the real dough lies in the diamonds which are sitting in the space.
Mm-hmm.
And it took some effort on the other side to tell them that how a small fund, if you think of it,
Mm-hmm.
can never be $1 billion business.
Mm-hmm.
Funds by design are meant to be selective.
Mm-hmm.
And there is no fund globally which is investing in early stage startups, but it's $1 billion fund. But on the other side, co-working is $1 billion business, right?
Yeah.
So there we were very focused, where we realized that we want to have our core as co-working, and a lot of these incubation activities we are doing is something which is one division, but the core remains co-working.
So this model of sort of investing in your in the companies that are part of your co-working spaces has been replicated elsewhere. One of the ideas I thought, and I want to know from you if this happened or not, is you could do something sort of like what Y Combinator does, right? Like give them a 150K check and take a 7% equity in the company. But you could do a slightly modified version of that, where you could do, hey, you can use a co-working space, like you can allocate a certain percent of co-working space for a certain time and in exchange for equity. Did you guys do any models of investing a startup in such format?
We initially thought of it, but we parked it honestly.
Mm-hmm.
I think the key reason, and something I can keep debating till we try it out, but the key reason we had was that what will naturally happen, like imagine the flow of conversations, right? Where
Yeah.
there are members coming to your space and applying. And then to a few, you're saying, hey, you are great, and I'll take equity in you. But by the way, to the others, you'll say, you're not good, and I want you to pay up.
Yeah.
And that passing a judgment on your customer while they're coming in, and especially while you're trying to create a community and have people interact with each other, it's
Yeah, I mean, that's a great
thought
point,
it won't be a
actually.
great dynamic.
Yeah, I mean,
Right.
it doesn't make sense in terms
Right.
of how your incentives are aligned.
Right. And then the third thing, and I'll kind of link that back also, is I think the reason money was invented and barter was done away with is money just makes life simpler. So even if we were doing that, the transaction would have been where the customer, we would have said, I'm giving you so much worth of space for free.
Yeah.
And you give me equity equivalent of that.
Yeah. I mean, that's
So
why
instead of that,
money
it's
was
just simpler,
invented.
right?
Yeah.
So it's simpler. You pay me for the space, and then if I like you, I'll invest in you.
Yeah.
Right.
Yeah. Because I mean, now that I've asked the question, it's much more clear that if you've done that way, you're also limiting your original business, which is the co-working space.
Precisely. And finally, it also, keeps you more honest.
Yeah.
It's very easy to think that, hey, I'm collecting equity worth so much, which will one day get monetized,
Yeah.
and kind of lose your sight on economics and profitability of a space.
Yeah. Yeah.
So we thought, let's just do it this way.
I mean, I was scrolling through your Twitter page and I found this interesting image where you're receiving the award from President of India for being the best emerging technology incubator. How did that come about?
So this was as I said, we continued running the incubator.
Mm-hmm.
And even though it was a kind of a parallel division for us, we tried to integrate the philosophy of incubation into our core. So the way I called it is where I said we are a community-led incubator. The whole focus is how can you make the whole space work like an incubator, and there are some of these which are startups which you are supporting, but more importantly, everyone in the space is helping each other. So that philosophy we kind of grew on and tried to keep track of what kind of companies are coming out, how we are helping them. And thankfully, Government of India, they recognized it. We, I don't remember exactly, but I think we were at about 12 spaces at that time. And which honestly, like if we look at the numbers and number of startups supported or anything, we were probably 10 times bigger than the closest incubators in India. So that's how it came about, right?
So were there any really successful companies that came out of your incubation?
Quite a few. Again, the reason I'm taking a pause is I don't want to sound like if we weren't there, the companies won't exist.
For sure, yeah.
So, and we were a lot less high touch, right? So rather, I should use the word, we were low touch.
Low touch, yeah.
Compared to a lot of accelerators or incubators you see otherwise.
Yeah, yeah.
But that said, a lot of good companies out of India, we've seen the founders and their core teams grow out of our spaces. So be it Rivigo, which is one of massive logistics company, which has grown out of India, Lenskart, another unicorn focused on basically eyewear.
Yeah.
So bunch of these, honestly, the list can keep going on.
Yeah. When I was in college, I used to use Lenskart to buy sunglasses. And funny thing about Lenskart is they have a name of their first sunglass, which was based out of an Entourage character, the TV show Entourage. That's how the name always stuck to me, because the Entourage lead character name was Vincent Chase, and their brand initially was called Vincent Chase.
Yes, and they still use that.
Yeah, they still use that brand, and whenever I look at that brand, oh, this is Vincent Chase. It's a creative name they got out, but it looks nice, and it was also cheap at that point of time. And Lenskart is doing great, right? So
yes,
the rest is history. In all your answers, right, when I'm listening, one thing which stood out to me is your focus on margins and profitability from day one. And today we have, startups and companies which are, even some of the huge ones which went to public, even for the Ubers of the world, the Airbnbs of the world, right? They've went to this humongous side and I mean, the poster child of co-working space, WeWork, right? They were hardly focused on making profits. So I'm kind of wondering what your take is in terms of like profitability versus scaling, and what did you guys think while you are in the thick of it?
Sure. So interesting that you mentioned WeWork, and it's taken us a lot of effort, and we continue to kind of undo a lot of things that they've put out in the industry as a way of talking of this industry. But I mean, coming back to profitability, especially talking of Airbnb and Uber, I think a lot of it really, Nataraj, is about what business model are you in?
Hmm.
For Uber, it just makes sense.
Hmm.
It's in a winner take all market.
Hmm.
And once there are 10,000 Uber cabs running in the city,
Hmm.
it's very hard for someone else to start a cab company.
Hmm.
So for them to burn money to capture the market just makes sense.
Hmm.
I feel in co-working is not as much of a winner take all market
Hmm.
because especially post COVID, there is a benefit of having multiple centers across India. Companies are demanding certain amount of flexibility in locations
Hmm.
where a multi-location operator can give some benefits.
Hmm.
But other than that, if you think of it, till pre-COVID,
Hmm.
almost 90% of customers of all co-working spaces
Hmm.
were basically teams sitting out of a location.
Hmm. Yeah.
And which means if there's a great guy running a single building next to yours,
Hmm.
and if he or she they're doing a great job of it,
Hmm.
then just because you have 10 other locations in India, it doesn't matter.
Yeah. Yeah.
Similarly, you could sort of talk about locking in a customer,
Hmm.
but at the same time, once the lease is over,
Hmm.
or forget that, right? If you're truly a co-working space running in a flexible environment and you're
Yeah.
saying customer is a month-on-month customer,
Yeah.
you may sell them very cheap for a month,
Yeah.
but the moment you increase your price, they'll go to a next door location.
Yeah, I mean, it's easy for anyone to hire a building, and I mean, it takes a small amount of capital to get started and be a competitor for, let's say, a Hyderabad branch or an NCR branch.
Exactly. And
Uh,
which is why we felt that this is, if it's not a winner take all market, if you're burning money, what are you burning it for?
yeah, yeah,
Right.
yeah,
That was a logic to it.
yeah. I
Uh,
mean, for whoever is listening, I mean, there's a great book out on WeWork. There was a recent book, and the stories that came out of that book are really amazing. I mean, it's not
right.
related to co-working space, but the amount of craziness that went through in that story was just outrageous. But you brought a really interesting point, and it's also a good segue to something I wanted to ask you about is the pandemic effect. The co-working space is one of the spaces which got directly impacted on and are sort of seen the effect of COVID probably more than other industries. How did Springboard face it, and what is the current status of co-working spaces? Do you see any shift in terms of how employers will think about co-working spaces? Do you see the demand going up or down, or what is the nature of work it going to affect co-working spaces in general?
Very. So let me split this into two questions. So on the how did we face it?
Hmm.
You're right. It was a big blow for us, like the whole co-working space industry. Uh, we went down to the market initially to just shore up some capital to be able to survive.
Hmm.
Thankfully, our investors really believed in us and they believe in the future of co-working.
Hmm.
And right in March, just before lockdowns in India happened, we were able to get two issuer rights which got subscribed by our investors.
Hmm.
So that was on how we handled that. Then post that, of course, we went through the during lockdown period the pain of renegotiating with the landlords.
Hmm.
Our team stuck by us, even though there was about a couple of months of uh, very little or no salary, etc.
Hmm.
But thankfully, we've gone through that, and now that the market is coming back, we are picking up bits again.
Hmm.
On the industry and evolution, it's very interesting where co-working has led to a vast majority of companies who were earlier still thinking of co-working as a one way of creating office, but uh, they would like still keep aspiring to have your own office.
Hmm.
So those companies are now realizing that this is the way to go.
Hmm.
just the way earlier they would have cars on their own company rolls,
Yeah.
picking and dropping their employees, and they've shifted it to a variable system where taxi operators do it, or a Uber or a
Yeah.
B2B Uber version does it. In office space, now
Mm.
companies are realizing that setting up a whole big office, having a team to manage it with the pre-predicted, pre-planned usage that you need to do for next 3 to 10 years
Mm.
is something which is not making sense for majority of the companies.
Yeah. Yeah.
And
Um,
especially kind of clubbing it with this work from anywhere kind of a structure,
mm.
companies are adopting flexibility a lot more,
Yeah.
and we are seeing a new kind of demand come towards co-working spaces.
Yeah. I mean, all the companies pretty much around the globe are rethinking remote work, right? So previously it used to be tough to be in a remote position, even in the US, right? You had to have a negotiation, and maybe if you are a senior employee, you could do remote work, but companies preferred on-site work. And with, I think, pandemic, the sort of mental challenge to remote work is removed right now. And one interesting trend, I think, because a lot of companies are offering now the hybrid approach, right? You can either work remote, or you can come to office, or you can do, half and half, or you can move to a place where you're most comfortable. You can move into a city that you're comfortable. So in that sort of scenario, the best way for them to expand their location is using co-working, right? If you are a multi-city co-working space, then corporates might, instead of going through the hassle of creating these remote sites where employees are working from, they could just use a co-working space.
Precisely.
So
So one is exactly what you said, which is the remote areas.
mhm.
Then the other is flexibility on amount of usage, right? So
Yeah.
I have an employee who may come in sometimes,
Yes.
or I will have my team get-togethers on Tuesday and Thursday, but other days it might be empty.
Yeah.
So optimizing infra use for such things is something that co-working were already enabled to do.
Hmm.
And I think that's what's transforming the way commercial real estate industry is. Really.
Sort of extending onto this conversation is because when I thought of co-working spaces, one of the way I think about it is it's resource optimization, right? You're optimizing real estate, you're optimizing usage of electricity, you're optimizing the operations that sort of goes behind keeping a place working and going. We've seen similar resource optimization ideas. Even Airbnbs, for example, is a resource optimization idea, right? If you
Right.
have an extra space, you rent it out for someone who needs it. And even in US right now, there's a new startup which is basically Airbnb for garages, right? You can just rent out your garage and for people to store their stuff. So that's
Okay.
also a thing right now. So one of the things that I've always thought is this extension of workplace idea, which is let's say now we are podcasting, right? At some point, we'll also start podcasting in person. And if you
Right.
just consider podcast, a 91 Springboard like company could start a podcast studio, which anyone can book a 2-hour slot and record their podcast and go. So I've always thought, like, if WeWork becomes more and more successful, and that will happen in US at least, what do you think of such ideas or extensions that can come in co-working spaces? Do you see that happening anytime soon?
So let me put it this way. I see co and post that, let's put a blank there, right? So I see
Mm.
co music creation,
Yeah.
co podcast creation, co studying.
Mm.
A lot of these come up,
Mm.
and they're there, right? Like there are a few companies which have a bunch of music studios
Yes.
around. In India, this it's called neighborhood libraries, a thing.
Mm. Mm.
It's called library. It doesn't have books of its own.
Mm.
It's really like kids studying for competitive exams.
Yeah.
They just go there and sit because your homes are otherwise smaller. You're not able to concentrate.
Yeah.
And the moment you're seeing 10 other kids sit and study, you just tend to concentrate more. So these are happening. If you ask me on the, do I see co-working spaces start doing these things in a very immediate future? Uh, let me stick out my neck and say no. And the reason is because the commercial office bit of co-working
Yeah.
in itself is such a big market, and
Yeah.
it's now coming back with a vengeance.
Hmm.
So I think the co-working operators will really have their hand full
Hmm.
to be able to start creating these other wings for now, right? So
Yeah.
that's how I feel it will be for at least next 2 years.
Yeah. Yeah. I mean, that makes sense, but it's also an idea for other competing co-working spaces to offer as a service as well, I think.
Definitely. So if you're a smaller co-working space, which feels like you need to again pivot to create a right kind of focus on a niche market and
Yeah.
be profitable in that, a lot of these ideas would work.
Yeah. So I'd like to like shift gears a bit and talk about your fundraising experience. I mean, you had Deepak, who was your early investor, but you went on to raise, venture capital from a Japanese firm as well, right? So how was that journey? And sort of a twofold question, like how difficult or easy it was, and what was your experience of raising funds for Springboard, and what is the change that you see? What happened between 2013 and right now we are in 2020, end of 2020? How did the fundraising scenarios change?
In our initial rounds, uh, it's very uncool to say this as an entrepreneur, but I must confess that it was easy once we figured what our model is.
Mm,
So initially, till we were about 5 or 6 spaces, till the time Deepak came, we tried to fundraise, and a lot of investors at that time, especially VCs, they won't look at us. They'll keep saying no. Uh, Indian VCs didn't have a thesis around co-working at that time.
mm,
Uh, Once Deepak came in,
mm,
raising our seed round and Series A round
mm,
was something which was honestly a breeze.
yeah.
And largely because of the kind of background Deepak had.
Mm,
He has been your very honest, very sincere person. Of
mm,
course, people who've been his customers or who've known him in life,
mm,
he's one of those guys where people would trust him,
yeah.
right?
Yeah.
And when he decided to come in full time
Yeah.
into 91 Springboard, a lot of these people were just willing to bet behind him.
Mm,
Beyond that, our team was great.
yeah.
Varun, Anand, and I mean, you have to talk to them to realize that they're rock stars. And finally, having a big daddy in US who's really grown, raised
Mm,
massive funds,
mm.
also leads to a signaling effect which allows you to raise it more easily in India.
Yeah, yeah. I mean, you had, I think my sense was you had two things going. One is you had a really solid team, a sort of a three things actually. You had a really solid thing. I mean, this is my perspective looking externally, right? You had a really solid team with diverse experience, and you had Varun who had already sold uh, a previous startup, and you have Deepak with incredible credibility. And the second thing that I think worked for you guys really well is your focus on profitability from day one. And you can correct me if I'm wrong, but and the third thing is, I think whenever you have a company like WeWork, or even for Ola, if there is a Uber equivalent, that actually gives venture capitalists, okay, there's an opportunity here, there's a proven model here, and people are always chasing those kind of opportunities that worked elsewhere. I mean, we have seen that with starting from e-commerce to Uber to now co-working spaces, and now ed tech as well, right? Because these things worked somewhere else, it's often that we try to find the equivalents that will work, or VCs tend to chase those models as well.
You're right. So those were the primary things. And plus, finally, the fact that our customers were really happy. Our retention rates were great.
Mm.
We were working with the bestest brands.
Mm.
So honestly, almost everything was perfect, right? And that allowed us to fundraise
Yeah, yeah. So I had to
much more
ask,
simply.
I had to ask another question because you went to an IIT, you went to an IIM, right? So there was this conversation I was engaged in Twitter about, the VC's bias towards investing in IITs, and you're sort of the poster child for that. So I think I have to ask this question: is there a bias in Indian investors towards investing towards premium college founders versus non-premium college founders? And I'll give my opinion as well.
So my answer is yes. And I think it's no different from the bias that investors have in US for Stanford and Berkeley founders.
Yeah.
Uh, and the reason, honestly, is I think in the beginning, when you're investing in a startup, there are
Mm-hmm.
so many unknowns
Mm-hmm.
and there's so many risks that you're taking that this bit of the founder coming from premium college kind of covers for the risk of would the founder have a network or not,
Yeah.
the founder of a certain base level IQ or not.
Yeah.
And I think it's honestly driven by that.
Mm-hmm.
The other founders who are not from premium colleges, they find it harder to fundraise.
Yeah.
But I think once they're able to prove, so they have their other proxies, right? So for them, the
Yes.
proxy might be traction.
Yeah.
It might be a proven network.
Mm-hmm.
Whereas for someone from a premium college, the fact that they're from premium college kind of proves their network.
Yeah. I mean, I've seen sort of both sides of the table, and when you're investing in a company at an early stage, the things that you look at, you basically have no data, right? It's completely an opposite to what you do in public markets, where you have all
Right.
sorts of data. While private companies, you have nothing, right? If it's on pre-seed stage, what you're betting is essentially the team. And I think the signal of premium college is probably the only signal high enough that is attracting the capital at that point. But I also think that that effect also like reduces over time. I mean, the effect will not go away at any point soon, but it also slowly reduces because we have some incredible companies created, right, from non-premier college founders as well. So it's not just about them, but it's sort of our human tendency of finding signals when we are facing an uncertain situation, and it happens everywhere. I mean, in US it happens with the Ivy Leagues. In India it happens with the IITs and the BITS and NITs. So especially at pre-seed stage, when the company has literally no data, some of the times you don't have a product. In that cases, I think it takes a huge advantage when you have a team from IM or an IIT, or even in your case, you had Anand from, I think, Stanford, right? So it sort of adds to the effect and your ability to sort of create and raise again, right? Because this is not going to be the only time you're going to raise. You have to raise again in most of the cases, in most of the startups that you have to raise again.
I definitely agree with you. In fact, I'll give you another simile, and I find that I end up giving a lot of talk to entrepreneurs sometimes.
Yeah, yeah.
And there's this, like if you're not from a premium institute, you almost feel like VCs are bad because they do something like this. And my favorite example is if you end up opening Tinder,
Hmm.
right? And you see two profiles and one is from a premium institute and one isn't.
Hmm.
Don't you give a preference to the one from premium institute,
Yeah,
right?
yeah,
VCs are, that's what they're doing, right? And they are opening their own Tinder.
yeah,
They're swiping. They don't know who they'll meet and what will it turn out as.
yeah.
That premium institute kind of is just one more data point for them.
Yeah, when you do that sort of investing professionally, I mean, the whole decision making, sense of decision making becomes such an important point. And then you find your own signals. Whenever I talk to investors, each one has their own way of finding this signal, right? Sometimes even data is a signal. When in your case, you had, a low churn and a lot of good brands and all that good stuff, right? So the signal is sort of changing, but in each stage, and everyone has a signal, and we use that signaling pretty much everywhere in life, is what I feel.
You're right.
So I think this is also a good segue to talk about what I mean, the recent, early stage investing that you've started through AngelList Syndicate. So what is your thesis, and what is sort of your plan for that in the future?
Okay. So interestingly, I didn't tell this to you, Nataraj, but I've just recently taken a step back from my operating role in the company.
Okay.
So Anand now runs the business as a CEO, and we've installed a professional team to lead various divisions in the company. So it was a good time for me to take a step back and think through what I want to do next. I continue to hold my shares, and I'm a co-founder, but I don't have a day-to-day role in the company anymore. On the other side, this bit of interacting with a lot of entrepreneurs, helping them syndicate, helping a lot of angels is something that I've done since forever, right? It's been 12 years now since I've been doing that. So I thought, let me take this break time to just structure it better. And that's how I thought, let me just set up a syndicate on AngelList. Honestly, it allows me to be somewhat lazy. So next time I'm talking to an entrepreneur, I can explain to them this is what it is. Whenever I'm coming across an angel who says, Pranay, can you share deals with me? I can say, here, just go join this and you'll get to see it. Because otherwise I was working on this memory and doing hundreds of phone calls. So that's what it is really. A lot of friends, people who've invested with me before. Like I've been on the cap table. When I say I mean on behalf of organizations too. But I've been on 70 odd cap tables now, and seen about 30 odd exits. So just this is my way of putting it all together in a much better structured manner.
I mean, I think it's a very natural position that you are in, right? It's almost like it feels like, I mean, there's this interesting quote that I read recently somewhere, like, do something that feels like a game, but feels like work for others, right? If I sort of think that, okay, I'll start a fund, then it becomes a chore, or sort of I need to understand the mechanics of it. If I'm coming as an outsider, I have to build a network for it. I have to have LPs who are funding me, and I will be the GP. So how do I structure it? But having all that experience and being in 70 cap tables, how the exits work, how the whole system works, how the game is played. So I think you are sort of in the right position to actually do this. And I think a lot more of you should actually do it. That's my view as an LP of some sort of these syndicates as well.
I fully agree with you. So it's just, it's I've done it enough now that I just can do it in my sleep, the way they say it. And I agree. Like in general, India needs a lot more angels. I feel the whole startup industry and machinery has now started going. And I'll tell you why I mean that also.
Sure.
So while a lot of innovative technology companies have been existing, we've had Flipkart already, etc. now, but a key element of the oil that powers the machinery is exits.
Yes.
So till recently, a lot of angels and VCs were putting in money. The companies were there, but the exits weren't coming. And I mean, we've heard of PayPal Mafia. All of that exists because PayPal gave this massive exit, and then everyone went about doing different startups, funding different startups, and that money started flowing in the system.
Yes.
I think that's what has now started happening in India. Flipkart acquisition by Walmart led to a certain amount of exit coming in.
Yes.
Paytm has already made a lot of people wealthy. Myntra. So there are a bunch of companies in India which have now, especially tech startups, which have created enough wealth, and not just stock wealth on paper, but actual money in the account. And that has started flowing in the system. And that will really lead to the next big wave of entrepreneurship getting created.
I mean, you're absolutely right. We need more and more exits. And one of the things when I see, I mean, I was about to write a post about like, what is the North Star for Indian ecosystem, right? What is the North Star in, let's say, next 5 years? And for me, what I see is we need to get to a position where we are listing companies public, be it in India or in US, or as well. And the third point is, how do we get sort of create a platform for acquiring Indian companies? One of the models that I've encountered, I mean, there are two countries which did exceptionally good job of getting exits. One is China, and the other one is Israel. Israel famously had this venture program where, in order to create sort of this symbiosis effect of, because I mean, a lot of people don't realize this is because exits happen because individuals involved know each other or know about those company from early stages of the company itself. So what Israel did was they had this venture fund program where they allowed like top tier VC firms to invest in Israel firms. And the government was, let's say if you raise $1 million fund, the government was giving an additional $1 million $1 million to put in their fund, but they're not going to take the profits from the fund. So this sort of created a huge and massive inflow of VC firms into Israel. Well, what China did was, and even like some of the companies, right? Israel is now known for a lot of tech and security startups. And there are a lot of examples where, for example, PayPal acquired a security company for $150 million. That was sort of the first huge acquisition for Israel ecosystem. And now if you look at China, the amount of companies that are going public both in US and Hong Kong and Shanghai are at almost 10 or 50, 20x of that of Indian companies. So I think having those exits, I think will change the game. And as you said, Flipkart, Myntra, Snapdeal, Paytm, right? These already have created wealth in the system, which is actually now, I know, people like you who are starting syndicates are actually how the ecosystem should evolve.
Yes. And Nataraj, I'll add one more thing, right?
Mm-hmm.
I think so. The IPOs and big ticket M&As is one which is definitely needed.
Mm-hmm.
I think the other bit which really helps the ecosystem is quick, small ticket M&As.
Yeah.
And I mean, if you look at Y Combinator, the kind of just the way the companies there used to get acquired, right? There was this kind of a unsaid rule that there's $1 million per engineer.
Yeah.
Right. So you have 4 engineers, 4 million done, signed.
Yes.
And
I mean, a lot of aqua hiring also, right?
Aqua hiring, but like in India, a lot of aqua hiring that we see still is really, please shut down the company and I'll give you jobs.
Yeah. Yeah.
But the aqua hiring where the investor still gets, say, a 2x or a 3x, and the entrepreneurs get something which is equivalent to their the cost of having given up salary during that period.
Yeah.
Right. I think that is the other bit which keeps the machine flowing well.
Yeah. I mean, even in the US, the most average, I've heard a stat where the average acquisition happens at 100 million to 150 million. It's not these big ticket $1 billion things that we usually talk about. It's actually in the 100 million to 150 where actually the most acquisitions happen. And those are really profitable exits for the people involved, both the investors and the founders and the early employees, and that basically creates a huge ecosystem. And another issue I wanted to talk to you, because you're also now getting into investments and you have LPs, is and we've talked about this in our previous conversation, is the check size issue, right? in one hand, I'm seeing in the US ecosystem, you have someone like Gagan Biani, and ex-co-founder of Udemy, starting a new company, and he's saying, hey, we'll have a crowd investment round with as minimum as $500, right? And in our conversations, we talked about, founders in India having, limiting the number of LPs that are getting into a round. So why do you think that difference exists today? And my view is that for founders, even in India, I think they have to allow a lot more early stage small investors, because in a way you are helping the whole ecosystem, like we've talked about, right? If an exit happens, you're creating more investors, you're creating more early stage employees who will become founders themselves. And also, most importantly, these early stage investors will become sort of a network for you, which will help both the company as well as, they'll become your unpaid spokesperson, sort of, spreading the goodwill all around the world.
So I agree with you, Nataraj. I think having a lot of investors who can go around saying, hey, this is my company, is something which is worthwhile. Right? And, I mean, if you think of it, Reliance in India is that story. Mr. Dhirubhai Ambani, he took money from small ticket investors and he created wealth for not just himself, but the whole investor group.
Yeah.
Right? There are stories of how people went to him and cried on how he enabled them to marry their daughters, etc., kind of things.
Yep.
I think the reason it's not being adopted widely by tech entrepreneurs is linked to regulation a lot more than will always. So right now, still the kind of crowdfunding regulation that got passed in US is something that the Indian regulators are still figuring out. And,
one correction that I want to make is, like, I'm comparing it not just the crowdfunding aspect in India, but just in case of, how many LPs you want to have on your syndicate, even in the accredited investor side of things, right?
Right. So the way regulations work in India right now, if you have more than 200 people on your category, then you are governed by a different set of regulations, and the kind of rules you need to follow around filings you do and compliance you do are much stricter. So I think so AngelList and Let's Venture, which is really massive. It's like the AngelList of India and doing a great job at it. They have solved it by doing it under a structured, what's called an alternative investment fund in India.
Yep.
It's still early. It's been, I think, less than a year or so since they've been doing this. So I feel very hopeful about it. I think give it another 2-3 years and we'll see a lot more of buzz happening here, where these structures will become popular.
Yeah.
And because of these structures becoming popular, people will be able to invest with smaller tickets. So honestly, I feel the ball has started rolling in that direction. It's a matter of time.
Yeah. Shifting away from, check sizes and investing, I want to talk about the place you're living in and where I studied for 5 years, Goa. And the sort of opportunity right now, one of the things I've been noticing is a lot of people now have the flexibility to move to different places, and a lot of cities are rethinking of how to attract talent. I mean, we are seeing that in the US, like a lot of SF to Texas or New York to Miami migration is happening because of the flexibility, right? So I'm wondering, like a place like Goa, right, which is sort of one of the famous tourist destination. How is Goa thinking, and how do you think Goa will evolve? And as an advisor to people who are in touch with the regulation, how do you see Goa, and how can they actually monetize this opportunity?
Sure. So it's interesting where we were one of the first companies at our size to shift our headquarters to Goa. And we literally shifted with a 40 people team, 3 of us co-founders. We've been here for about 4.5 years. Since we shifted, Delivery, which is a unicorn logistics company in India, has shifted their headquarter here. I feel a lot more of this will happen. And you're right, if anything, pandemic has led to this getting adopted a lot more. One reason is people being comfortable with remote working, including your clients, right? Now they're more comfortable with talking to you remotely.
Yeah.
The other is the whole disillusion with being in a big, dense city. The infrastructure there is broken, it's polluted. If there's a disease, it spreads much faster and all of that.
Yeah.
So I think it will get adopted. If you ask me, what does Goa as a government need to do? I honestly feel it's a lot simpler now, especially if you look at tech startups. These are companies which don't need too much regulatory support.
Yeah.
They have been able to grow because the regulations were ignoring them rather than because of the regulation.
Yeah.
So I think it's a lot easier than regulation. I think a large part of it is simply marketing. I think telling people that this is an option. Here are examples of companies which are already based here. Enabling a much easier trial. So for an entrepreneur who wants to come to Go and try it out, having a couple of nice spaces that they can approach, they can work in, while they're here, they get introduced to some great entrepreneurs around here that allows them to think that they're becoming a part of a society rather than they're uprooting themselves from a location and they'll be setting everything back again from scratch.
Yeah.
I think a few of these things are more important. I like the good part for government is at least the IT entrepreneurs. I don't think they really care as much about tax breaks.
Yeah.
Right. So it's a much cheaper effort for government to pull this off.
Yeah. So before we end our conversation, do you have any suggestions in terms of books, podcasts, or blogs, for, people who are looking to start their own companies, or sort of anything that has influenced you and helped you?
I think so. Throughout our conversation, also, I talked about how I have focused a lot on profitability as an entrepreneur, right? And the way we talk about it honestly does sound sexier, right?
Yeah.
There's this element of, hey, all those people who are scaling companies massively and burning they don't know what they're doing, and there's this big people giving them money.
Yeah.
But we are the ones running real businesses, right? So that's how we sometimes end up approaching it. I will urge people on this blog to read this book called Blitzscaling by Reid Hoffman. I've read it recently, and it's something which makes me really think a lot. I end up taking a pause after a few pages and keep thinking through different strategies. And I'll really recommend you read that. And while reading that, think through, be open in your mind on how it's not that one is right and the other is wrong. It's a lot about what is right for a kind of company and what's right for another kind of company. I love the way Reid has written the whole book, especially also how he talks about this aspects of when you are blitzscaling. There are things which will break, and it's okay to let them break, right? And I think that's very important.
Yeah, I mean, the best books are always the ones that stop you from reading it and start thinking about it. I always thought the best books you shouldn't read continuously. You have to give gap and think about that. That's the book that is actually triggering something in you. Yeah, thanks for the suggestion, Pranay, and thanks for this conversation. And it was great talking to you. And thanks for being here.
Thanks a lot, Nataraj. Great talking to you. And I hope to continue following your blog and listen to a lot of great speakers. Best of luck in this journey of yours.
Thank you.